So I'm pleased to introduce Raghu Yarlagadda, who is from FalconX. You're the CEO of FalconX. So before we dive into the conversation, could you give us a quick overview of your background?
Sure thing. Thanks so much for having me, Harshitha. In terms of my background, I started my career as an engineer. I specialized in image processing and machine learning. After that, a few startups, and then I went to what I call the dark side, business school. So fortunate to have gone to Harvard Business School. Right after HBS, I went to Google. There, I drove efforts on a product line called Chromebooks. These are laptops powered by Chrome, the browser. Did that for 3 years. Saw incredible growth in Chromebooks, especially in schools. And I did that for 3 years. After that, some of the brightest engineers that I know at Google, Facebook, and a bunch of these companies, they weren't stopping talking about blockchain. And for me, blockchain was not the most efficient database because you're replicating copies everywhere. And I was like, why are these engineers so excited? So I chased these engineers to understand blockchain, and I fell down the proverbial crypto rabbit hole. And fast forward a year after, started FalconX.
And tell us a little bit about FalconX. What exactly is it? What is the why behind why you wanted to start the company?
Yeah, absolutely. First, I'll give you context on FalconX, and then we can get in the why part of it. What is FalconX? FalconX is a one-stop shop for institutions. By that, what I mean is we'll break those two components out. Institutions. We serve a diverse set of institutions, all the way from the world's largest hedge funds, asset managers, crypto native funds, retail aggregators, payment processors, any institutions practically. And for these institutions, we take care of any of their digital asset needs. And typically that falls into three buckets: trading, credit, and clearing. On the trading front, the job is how do you get really, really good pricing with reliability and security.
Right.
That's a very complex problem in crypto. It required a lot of tech. So that is one of our founding verticals. The second thing is credit. How do you wrap these prices that institutions need in a variety of credit form factors, whether it's leverage or delayed settlements? So we basically customize to institutional needs. The third thing is clearing. How do you actually safely store and move crypto from point A to point B? These are the three things that we do better than most other people in the planet.
And settlement, I'm assuming, would fall into that third bucket?
That's exactly right.
And then so would custody?
Yeah.
Okay, cool.
That's right.
Great. So there are already so many exchanges out there, and I'm sure you get asked this question a ton.
Mm-hmm.
Why did you want to start another one?
I'll break that into two parts, right?
Sure.
I mean, why did I start FalconX and specifically the institutional infrastructure? So the first part, I mean, why did I start FalconX? I think I believe in the next 5 to 7 years, a lot of world's value will be tokenized in one form or the other. Crypto is the first form of tokenization. Slowly we are seeing that US dollar getting tokenized in the form of stable coins.
Mm-hmm.
Likewise, I mean, we expect tokenized equities, tokenized fixed income markets, Fortune 500s launching their own tokens. So as most of and entertainment in the form of NFTs, exactly. As the world gets tokenized, I wanted to build a Google for that world. So that was very exciting for me. Specific to, yeah.
That's actually really interesting. So
Mm-hmm.
you are using, the corollary that you're drawing here is that essentially an exchange is a search equivalent
Mm-hmm.
for the world of tokenization.
That's exactly right. And that is why we grew incredibly fast. I mean, that thinking really helped us build a very concrete product.
That's interesting.
For example, if Harshitha wants to look for really good pricing for buying 10 Bitcoin,
Mm-hmm.
it is so hard because there are 18,000 venues that are buying and selling Bitcoin.
Right.
For you to actually get really good price, manage your inventory and settle and clear, it's a painful process. With FalconX, all you just need to do is come to the portal. I want really good pricing for 10 Bitcoin. You get the price, no slippage, nothing, no fee. You simply say buy.
So are you guys essentially, or at least one facet of your business is essentially like an aggregator?
That's exactly right. Given your financial background, it's easier to explain to you. You got it absolutely right.
Oh.
So we are not a quote unquote exchange. We are at the brokerage layer, meaning we aggregate liquidity from exchanges, other OTC desks, other market makers, and miners as well. My goal is to figure out really good pricing for you once you come for pricing and doing so reliably.
Interesting. Let's look at why you wanted to have a broader purview
Mm-hmm.
and utilize the second and third bucket.
Absolutely. That also takes, your previous second question in terms of institutional infrastructure. Why did we start that? So once we believe that a lot of world's value is going to be tokenized and the world needs a gateway to navigate that tokenization, we felt that trading is the best place to start. But what we quickly realized is a lot of institutions are looking for really good pricing, but they also told us hey, I mean, if I want to express a $3 million view in the market and I only have $1 million in my bank account, I need credit to basically facilitate that gap. And you can keep that $1 million just if the position moves against me. So we
So
are
essentially
riskless
you
in that
provide
region.
margin?
Exactly. I mean, in a riskless basis.
Okay, I see.
So because we reserve the right to liquidate the position if the need
Right.
be. So what we realized is institutions deeply care about all these workflows coming together. Without FalconX, they went to a credit shop, got credit for 3 months, and then went to an exchange, looked at some market neutral strategies there. But the pricing on any exchange is not the world's best because it's split over different exchanges and you need to route between them. So as a result, what's happening is if that strategy on a particular exchange is not working, they're losing balance sheet efficiency because I need to still pay my interest rate because I bought the loan for 3 months. There's so many inefficiencies like that slowed down institutional adoption about 2017 or 2018. But once players like FalconX came in, it became extremely simple. Now, not only do I give you really good pricing, I give you delayed settlement, leverage, and things like that, all in 60, 120-second workflows. So things are very elastic right now. So just by the virtue of adding these blocks together, Harshitha, the power of the platform became truly compounded. So in a matter of 3 years, we are, I think, second or third company to basically go from zero to $3.75 billion valuation in a matter of 3 years. And we did that in a very profitable way. Very strong unit economics, very strong profitability for a while now.
So talk to me a bit about how, ex ante, when you were building this product, how you ensured that that would be the case.
Yeah. I think as a product manager and an engineer, I'm trained to basically very deeply look at the use case and the user need. One thing that we realized in 2017, 2018, there are not a lot of institutions playing in the space. And so as a consequence, a lot of products that were built were very retail centric. But when we looked at the data for any major asset class, it is very clear that 60 to 80% of the asset class will be institutions. So if you believe that the world is going to be tokenized, institutions are going to be here. So we deeply focus on the institutional workflow and what the institutional needs are. So that is a big reason why we grew incredibly fast. And in terms of the growth story, we've been incredibly fortunate. There are definitely tailwinds because of the macro market, but we became one of the largest in 0 to 3 years. And all of that without a sales or a marketing team. It's a 3.5-year-old company. Until about 2 months, we didn't have any sales or marketing. It's all word of mouth and referrals. One funny anecdote, one of the world's largest hedge funds, they came to the website and they signed up. Typically, companies spend thousands and thousands to acquire these customers. We looked at that sign up and we were like, this can't be right. This
Can you
probably
say who it
phishing.
is?
No, we won't be able to. Customer privacy is super important.
Yeah.
Literally, they signed up and we were like, maybe this is a phishing attempt, right? We didn't even bother to respond. But after a day, what if it is right? We responded and they are one of our big customers now.
So are there other exchanges or similar products out there that have a super narrow focus on institutions, or is everyone else pretty much looking at both the commercial and the retail side together?
That's a great question. If you look at the Coinbase of the world, they started with retail first. They're retail heavy, retail first. They have an institutional offering. But on the institutional side, we are one of the very few that are completely focused on institutions. Now, because institutions are coming in droves, a lot of people are trying to start, but we are one of the largest in the space by margin.
I see. So what kind of tailwinds are we enjoying that we haven't talked about?
Absolutely. That's a question that a lot of hedge funds are asking. How do you prepare for the future? I'll break the response into two buckets, Harshitha, the headwinds and the tailwinds. I mean, what are the factors that are driving both? In terms of, I wouldn't necessarily call them headwinds, but in terms of factors that we all need to be super prepared for, the two things. The first and foremost, the regulation is going to catch up to the space because crypto is no longer in the fringes. Crypto is mainstream just for the fact that 20 out of the top 40 hedge fund managers that are all looking into crypto in some form or shape. There's a lot of excitement. At the same time, regulators do care about investor protection, especially the smallest guy coming into crypto. So given that, regulation is something that we all should be very aware of, very prepared. Fortunately, my clients deeply care about regulation, right? If you're looking at the world's largest hedge fund, they want to make sure that you're really well regulated. Otherwise, they're not going to touch it. So because my client incentive is very clearly aligned with what the market is expecting in the next 2-3 years, I think that's definitely something that we're anticipating and we're preparing well for. The second thing is security, right? The space had some choppy starts in terms of Mt. Gox getting hacked and exchange hacks and some of those aspects. But I think the security side of the space evolved so much that the amount of money that's lost in hacks is reducing, but that's definitely a small risk in the system. So those are the two things that I would say that we are constantly watching: regulation, on the policy side of things, and security on the technical side of things, because either of them are very, very big newsmakers and rainmakers. So we're watching that.
Right.
I can also elaborate a little bit more on the tailwind side if you're interested on why institutions are coming in.
Sure.
Yeah.
But are there more interesting, more nuanced tailwinds that you think are really helping the industry?
Absolutely. I think I would categorize 3 such tailwinds, Harshitha. The first and foremost is the inflationary hedge. A lot of institutions, US and worldwide, very clearly believe that the inflation is a very real thing. It's going to happen. As a result, they're looking for inflationary hedges. Now, gold is a great proven inflationary hedge, but it's a very physical asset. It's not 24/7. It's not truly global. It's very difficult to basically transact gold on a global basis if you're a global hedge fund. So the digital scarcity on the Bitcoin blockchain is a very powerful attribute. So inflationary hedge is a very real thing. We still get some of the largest funds coming into the space because they see Bitcoin as an inflationary hedge. Number 2, it's no longer just the Bitcoin and Ethereum show. Over the last 1 month, over the last week, there is some dominance of Bitcoin and Ethereum again. But if you look at the last month and a half, we were remarkably surprised on how many institutions went beyond just Bitcoin and Ethereum, especially on layer 1s, right? Equivalents of Bitcoin and Ethereum like, DART,
EOS.
Solana, EOS, exactly. Layer 1s are becoming, very hot. And this is not just institutions inquiring about them. Institutions are actively trading, other layer 1s. So that is another tailwind that we're seeing. And why are they trading? The tailwind is they believe that, technologies like DeFi are going to be very important for modern financial system. Otherwise, I can't believe that, we expect the Facebooks, Amazons, Googles of the world to work 24/7. These apps never stop. But most of your financial infrastructure, your trading, credit, clearing, all of that is just 5 days a week,
Right.
35 to 40 hours.
Right.
So to leapfrog the world into a much more modern financial system that is truly elastic, truly global, and 24/7, blockchain proved that it can happen at scale. Stable coins are the first example of that happening at scale.
Right.
So as soon as they see stable coins, they realize that layer 1s can support that. So that's the second tailwind they're seeing, layer 1s.
I see.
The third aspect of it is the power of the DeFi itself, right? Protocols, especially on the yield generation side, as the world is printing a lot of money, a powerful anecdote is I was just connecting with one of the largest Forex brokers on the planet. They're sitting on $70 billion earning 0 interest rate.
Wow.
So what they're looking for is they're looking for yield.
Right.
And if you look at there's a giant blob of $115 trillion of world's assets that's correlated, moving together, not generating much yield.
Right.
But crypto is generating yield because of volatility.
Right.
And why is volatility coming? Entertainment is also a part of crypto through NFTs and a bunch of others. That's naturally giving volatility, and that volatility is generating yield, and that yield is attracting a lot of new institutional investors.
Interesting. So 2 things. First, let's talk about the volatility. I'm intrigued that you attribute the volatility to the entertainment component. Do you think it's coming from other places? Just the fact that it's a speculative asset still?
Yeah. So that's a very good question. I don't think all of crypto's volatility is entertainment alone.
Of course,
right? But I would say entertainment is one component, definitely. The other 2 components is one is speculation. There's no question. The second thing is because it's truly global, the asset is fairly distributed around the world. As a result, news cycles in different parts of the world are creating that volatility, unlike an asset which is actually bred in one single country. So I would say these are the 3 reasons that are contributing towards volatility, speculation being one of them for sure.
Interesting. And then the follow-up question on the first point was about the inflation hedge. Do you think that because of the volatility, are people actively using this as an inflation hedge, or is it still more of a theoretical inflation hedge?
Yeah.
In terms of overall portfolio construction?
That's a great question. There are 2 components to it. One is what is the belief system? Because there is a massive portion of finance where there's the critical mass theory.
Right.
Meaning if enough people believe that it's an inflationary hedge,
will be.
it'll start behaving like an inflationary hedge. There is a component of that. The second component is if you look at the regression models and the digital scarcity of Bitcoin specifically, the 21 million coins, I think people are fairly convinced that that is very hard to fork or change. As a result, if you look at recently, the first pension fund here in the US came in a few days back.
Yep.
One of the crypto Twitter is attributing that because they are looking at it as an inflationary hedge. Inflationary hedges are usually macro or long-term bets. They're not looking at the local price movements like as in the next week or next month.
Mm-hmm.
They're looking at over the next 5-10 years, how is this going to pan out? In that horizon, a lot of institutions do believe that this is an inflationary hedge.
I see. And why do you think, if you were to attribute it to just a couple of different things, why do you think institutional investors are finally starting to get over their woes and their concerns about entering the space and starting to get more involved?
Yeah, that's exciting. I think one of the big variables that is not talked about as much these days, Harshitha, is the role of regulators. Something very interesting happened in the markets over the last 2 months. China came out and said, yet again, they're banning crypto.
Right.
But this is one of their stringent bans, right? They were very strict this time in terms of pushing, miners.
Right.
As that happened, the two things unfolded. The first and foremost is US took the stance of we are not banning crypto. Different agencies and different high-profile government figures came out publicly saying that we focus on investor protection, but we are not going to be banning crypto. That was a huge signal. The second thing, the world's largest country sort of attacked the world's largest decentralized network, which is Bitcoin. They basically said you can't mine in China anymore. And China was contributing roughly, you can debate the numbers, but 50 to 70%, like 50 being the most conservative, 70 being the most aggressive. So a country basically came in and said in 2 weeks, the 70% mining capacity needs to move out. Any other, if it were a company, it would have been dead.
Right, absolutely.
But in a matter of 2 months, the mining capacity just bounced back to where it was. That was a huge signal as well.
So who's picking up China's mining slack, so to speak?
Yeah, the data says it's US.
Really?
Yeah,
Interesting.
It is the US.
How were they able to procure rigs and stuff so quickly? Like, I thought that overall, finding rigs was kind of a difficult thing to do at this particular moment.
It was hard. It is one of the most complex supply chain problems when the world itself is recovering from a supply chain perspective.
Right.
Getting toilet paper to the country is becoming hard.
Right.
Now people are paying premium to actually procure those containers because the world is out of containers.
Right.
One of our customers procured a batch of containers, put their mining rigs in these containers, and shipped them. It took tens of days.
And somehow got around all of the port backups and somehow got them offloaded.
They paid huge premiums. And because the price is going up, they could afford those premiums. So that accelerated the shift. So the network self-corrected, sort of.
Interesting. Wow. Yeah. So in 2 weeks, there was almost back to 100% capacity.
So it's close to 2 months.
Okay, 2 months.
2 months, the hash rate bounced back to where it was,
wow.
2 months back as the ban was announced.
That's fascinating.
Yeah.
So on that particular note, taking extraneous, or at least with respect to the industry extraneous events into consideration, how did COVID impact your space?
I think that's fascinating because I think COVID really accelerated institutional adoption.
Really?
In 2 ways, Harshitha. First and foremost is as COVID came, for the right reasons, world started printing a lot of money. Otherwise, we wouldn't have been out of this pandemic as quickly. As the world is printing a lot of money, the search for institutional adoption and the inflationary hedge came in. That triggered a lot of institutional adoption beginning May 2020. So in one way, it truly accelerated, because of the inflationary hedge. The second aspect is world also realized that the financial infrastructure that we have today is not scaling, right? I mean, you can't go to a physical bank.
Yeah.
You can't exchange your physical note.
Right.
So what are the technologies that will leapfrog us to the next 20, 30 years, right? Because if you plan for another pandemic, so that's another line of thinking that heavily digitized the financial rails.
Interesting. Were there any negative impacts of COVID?
Yeah.
Either with respect to your company in particular or the space in general?
So one impact that definitely was, difficult to manage was as COVID hit, as world started printing a lot of money, people were also getting sick because of the spread of pandemic. Now, in for a company to basically expect 3 times more customers to show up and to make sure that every employee is remote and keeping them safe,
Right.
that part was very hard. Right, some companies struggle quite a bit. Our employee footprint, we're growing incredibly fast, but it's relatively small. We did all of this with 60 to 90 people.
Oh, wow.
So
Yeah.
that's why we were able to cope up very fast. But other crypto companies, they ran into a lot of challenges dealing with this massive growth while a bunch of their employees were sick.
So Raghu, thank you so much for spending time and sitting down to chat with us. Very much appreciated, and we wish you and FalconX the best.
Thank you so much.
Thank
Harshitha.
you.
It's
It was
a lot
a
of fun.
pleasure.
Bye.